Before we talk about financial statements, we need to talk about the accounts we use. Please print out the chart of accounts, which is included in handouts, as you will reference this document throughout this course. This is a list of accounts used by Sierra Corporation, which is the company we will look at to introduce you to the 4 financial statements. The accounts in red are used in Chapter 3, and the accounts in black are used in subsequent chapters. I used this slide at American University. This is a listing of common accounts used by companies. It also offers some additional insight on the accounts. So let's start on the far left, and we'll begin by looking at assets. Again, you can see there are numerous accounts that have been listed, and I just want to talk about a few of them. The first thing I want to talk about is if you see the word receivable, I want you to immediately think that these accounts are assets. Again, they represent amounts that are owed by customers and others to the business. Right, we have inventory. Again, inventory represents the products the company expects to sell, whereas supplies, again, I want you to think of supplies as these are going to be the items that are used in the business. The last thing I want to mention in assets is prepaid expenses. Again, this is always going to be an asset. It represents amounts that have been paid by the company that have a future benefit. And a great example of that is insurance, if a business pays for insurance for the full year. And then everything below prepaid expenses are long-term assets, and we'll actually take a look at those in a subsequent chapter. All right, moving along to our liabilities. Again, these are our debts and obligations. Again, liabilities should jump out at you because they're going to have the word payable in the title. Of course, there's exceptions. The first one being accrued expenses. Sometimes you'll see accrued expenses payable. Sometimes it'll be just accrued expenses. In either instance, I want you to think of this as a liability. All right? It represents amounts that are owed by the company to others. The other exception is this concept of unearned revenue. And if you see that word unearned, I want you to immediately think it is a liability. Again, it represents amounts that have been paid to the company by others, and they have not received the goods or the services. So until that company ships the goods or performs the services, it is a liability, and we are going to record it in that account called unearned revenue. Within our stockholders' equity, right now we're just going to have 2 accounts, contributed capital, and again, in this textbook, we refer to it as common stock, and retained earnings. And we're going to talk about stockholders' equity accounts in a subsequent chapter. We'll actually add to this. But for now, I just want you to think of common stock, which represents the contributed capital, and retained earnings, which represents the earnings that we've reinvested or retained in the business. All right, moving along to revenues. All right, when it comes to revenue, it should jump out at you because you're going to see the word revenue. All right, so you're going to have that source followed by revenue. You might also just see sales. And then finally, that last column, these are our expenses. And again, they should jump out at you because you're going to see the word expense. All right, the exception being accrued expenses because that is a liability. All right, again, the exception to this rule will be cost of goods sold. All right, cost of goods sold is just that. It's the cost of the goods that a company sold. Right, assets, liabilities, and stockholders' equity are reported on our balance sheet, whereas revenues and expenses are reported on the income statement. In this exercise, you will identify each item as an asset, a liability, stockholders' equity, revenue, or an expense item. The solutions to this exercise will be provided in the next video.